All right, good morning. Um, let's run down the top 10 things. Let's start with the S&P 500. I talked about putting on a hedge yesterday against the long stock portfolio that I have right now. Very long stock portfolio. That hedge is costing me this morning, but hey, that's the price of doing business. Again, the trend is still bullish above 37.40, so there's nothing new there. And there was a little bit of selling last night, but strong this morning so far. Same goes for the Dow. A little bit weaker, but bouncing back well this morning. It's much closer to the more recent weekly pivot area here at 30.50, so I got more of an eye on that, and that could be a tell for the broader market, but still well above all-time highs from 2020. So, I mean, again, until something changes, the market is saying it wants to go higher. As crazy as it may seem. Same goes for the Nasdaq. It's been the strongest of the bunch. So much for the rotation into value. I mean, growth is continued to be strong. I mean, this is in this past week has been quite remarkable. So again, the level for the Nasdaq is maybe all the way down here at 12,700. I mean, there could be some back and fill over the coming days. Even a day like today, I'm not sure how well today will go, but obviously a lot will depend on earnings in the coming days. So you could see a little bit of a sideways action today, but net, nothing has changed overnight, and trend is still positive. Now, where there is a little bit of uncertainty on my part, at least, is Treasury bonds. So I had a Treasury bond short right here at this level on this breakdown out of the smaller range, which I should also have on the screen. So it's a range breakout. It was a great trade, and now has given up a lot of that. So I thought out of this range also we would see some more selling. We haven't. Despite the market's advance, bonds have continued to actually stay bid. So I don't think that's concerning for the market per se, but it's definitely not the reflation move and the bond sell-off that was expected. So keeping an eye on this. I mean, I would really like to see it close down below the range level here. Close down below 16931. Break this downtrend line and continue. But the bond strength is not ideal. But that's that. Other than that, I mean, everything else is pretty much straightforward. Crude oil still strong. There's nothing new there. Gold, still short this. It's been super choppy. I still think this bar here will mark somewhat of an inflection point. As you can see, we've just been consolidating here for some time. So I'm down on this position, but not by a lot. I think my average cost is somewhere around 1847. Still looking for a continuation to the downside, but it's been choppy, so there's been nothing really new there. Let's do Bitcoin. Still in support, consolidating, nothing new. I'm not. I gotta do some work on some long term fundamental stuff. Maybe try to get an idea of what might be driving the price on a longer term basis. Besides all the typical things, I mean, obviously there's going to be some institutional adoption, but for whatever reason, these over this month, it's been very range bound and choppy, but it hasn't just completely crashed, which is probably a positive sign. So just keep an eye on that, but nothing happened overnight. Same goes for Ethereum. It's nothing new here, really. Um, Still pressing those highs, still holding these support areas. So you'd have to see a real breakdown. And I did a post earlier, but the Bitcoin Ethereum divergence is still quite strong. So in a weird way, I think that's positive for the space overall. But again, nothing really new here, down a little bit, but still up big this month. So euro dollar reacting well. We are long this, getting close to back in the money. I still think this is a good range reversal opportunity back toward the highs here. So decent action overnight. Happy about that. Pound, same thing. Choppy, but trending higher. So this breakout is still intact. So I'm happy with this position as well. Continue to watch that. All right, I want to talk about 3 stocks this morning. First is Tesla. First is Tesla. I think it's going to open a little bit this morning. I'll send out a tweet, but into earnings, I'm looking to play small, like literally one contract. But the strangle, maybe like the 1,640 strangle or 680 strangle. I think there could be some volatility around these earnings, but I also think that this could actually be quite a non-event. I mean, if I point back to October as an example, and even July, ironically, despite the volatility in the stock overall and it being such a battleground stock, sometimes earnings tend to be non-events just because, the company is not trading on this quarter. It's trading on a much bigger macro theme. Now that can be derailed. Obviously, Tesla can take a huge hit. I mean, it's had an enormous run since November. So if people took profits down to 700, it might be ugly that day, but in the grand scheme of things, it's nothing. So I have my eye on that. I think I'm looking at a strangle potential. So yeah, looking at a strangle opportunity. So we'll see how this trades. This regression line is just to mark the trend. I do think if it goes below it, could be a little bit of selling, but if it gaps down below, it really doesn't mean anything. I mean, stock could just dribble to the side and then go higher. It's not really a trend line that I think has any significance. I will say that support would probably be back toward the beginning of the month. I mean, that huge week was kind of like the huge kind of last advance, and then we've kind of consolidated. So as long as you don't really crash below 717, if you do own the stock, I think it's still positive regardless of earnings. And if you do own the stock and you have enough shares that you can sell calls against it, I would recommend that. Just because even if it does go up into earnings, this sort of acceleration is unlikely to continue forever. So there probably will be more sideways action like this, like it's gone sideways since the 7th already. And I wouldn't be surprised if that happened into earnings again. Next one I want to talk about is, we'll just look at GameStop real quick. I mean, obviously this is insane. And this will not continue. But I think in the pre-market it's up a little bit. It's just fun to watch. I will say this though, that whenever there is a big pullback in this market, people are going to point to this sort of activity because this is the sort of behavior that, and it's not in a negative way or they have no opinion on it. Actually, in a weird way, I quite enjoy the success that Wall Street Bets is having. At least at just pissing Wall Street off in general. So I'm not mad about that. But for anyone who bought at 130 by chance, they may never see those prices again. So we'll have to wait and see. But just be careful out there with this sort of stuff. And do not chase it. Just watch it. But if you want to make money in the long term, you don't need to chase stuff like that. But I mean, that's incredible. I've never seen that before. Talking about $100 range, unbelievable. And actually, I want to touch on one more because I know I had earnings this morning, and it's a position in the portfolio, American Express. So I think I'm going to be down on this in the morning, but we're still well above the larger range and the intermediate term range. I mean, this was a range reversal. It's kind of pissed me off. I thought we'd have a breakout. I'm going to continue to hold as long as we don't break 115. I think buyers should step in here the way that they did before we entered this trade back on the 8th. So waiting and watching. As long as we don't close below 115, I'm going to hold this position. And I think actually this, I don't know, Johnson & Johnson is doing quite well. So hopefully the vaccine news is positive, but I'm watching this trend line. If we break below this trend line, I'm not going to short. It's been a great hold this whole way up, but I am going to sell calls against it. But yeah, let's see what today brings. Go back to the futures. Yeah, I mean, they're rallying, so I don't know if it'll hold throughout the day. But the one thing I will say is that, VIX, let me do VIX, actually is better. VIX is still elevated on a historical basis, and we still have not reclaimed February even at 14. The pandemic, you could see the pandemic kind of start in January in terms of volatility pickup. And then now in February it kind of took off. And then obviously we know what happened February into March, but we haven't even come back to this 15 area yet. So, VIX at 15 would still be elevated versus what we saw for long periods going back to 2019 and then even earlier, right back to 2018. VIX at 12, VIX at 11. So we haven't really gotten back into that range. Now, that might be the top, but I doubt the top is going to come from VIX 22 in general. So I'd like to see the VIX kind of give up some steam. I know it has a lot to do with people buying a lot of options and whatnot, so it's not directly a one-to-one relationship with the stock market. But to see VIX this elevated and S&P 500 this elevated means that I think there's still obviously a lot of fear out there. And we're going to need to see that kind of wipe away before we can start thinking about a broader change in trend, unless it's going to remain elevated and price starts to come down below 37.40. But for now, again, trend is still higher. Let's see what today brings.